Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Steve Saretsky. He's a Vancouver-based realtor. You can find him online at stevesaretsky.com. Welcome back to the show, Steve.
Thanks for having me on. Always a pleasure.
Steve, how productive for the Canadian economy is the money that's been put into real estate?
Well, I mean, I think that anytime you have sort of large concentration of capital going into one sector, which obviously in Canada is real estate, that it tends to pull away from other productive parts of the economy. And so basically that's kind of what we've seen, right? I mean, you have here in Canada, particularly in Vancouver and Toronto, is, the number of realtors and mortgage brokers and people that basically build homes, dwarfs the number of, other sort of aspects of the economy that are more productive, such as businesses and, investments into machinery and that sort of thing, things that are, that continue to produce something, of sort of more long-term value, right? I mean, at the end of the day, Ray Dalio talks about this quite a bit, the hedge fund guy at Bridgewater, is that, when you think about it, is when you build a high-rise construction, so let's just say you build a residential condo tower, of course you're creating, some GDP, so the realtors are going to benefit through that. You're creating jobs for these construction guys, and, mortgage brokers, et cetera. But at the end of the day, once that building is complete, and once it's all done, it doesn't actually produce anything of economic value after the fact. So there's kind of multiple ways of looking at it, and that's kind of one of the ways. And so generally speaking, from a long-term perspective, you want to get capital into more productive aspects of the economy.
Trudeau has suggested that the federal government bring in a speculation tax like British Columbia has. So if you have a second home or recreational property, you're taxed. He said it would be a modest 1% tax. But a lot of Canadians have recreational property. It's not a revenue generator, and I don't see how you're going to rent out an uninsulated cabin or cottage in the rest of Canada in the wintertime. So is this just a tax grab?
I don't like to get too political because I think it's a polarizing topic, but I think that, in my opinion, it doesn't really make a whole lot of sense. I think that, I know there's certainly cries, in Vancouver and Toronto to ban foreign ownership outright, but I think that at the end of the day, when you're a country trying to attract, capital, and investment, I think that definitely deters not only investment into real estate, but it also evidently, deters businesses as well. So, not really a huge proponent of that. I don't know. There's a lot of empty promises from politicians and, especially around election season. So I don't know if it's just another one to try to garner up some votes. I know they proposed a couple other changes, but, I just don't really see that, foreign investment, how significant is in parts of Canada for sure, but I think, broadly speaking, I'm not sure how much sense that makes to roll something out like that nationally.
Should we expect to see a lot of political pandering towards the real estate market during the election?
Yeah, I think that one of my concerns is that, politicians, they try to appease the voters, and unfortunately, the reality is a lot of the voters don't really know the repercussions. Everybody thinks, you can get something for free. And, so what we see is, generally speaking, is, the politicians are opting to bring in policies that, say, oh, well, we're going to help, the poor first-time buyer. Let's help them into the market. So let's give them this, incentive or bonus or handout. And what it actually does is it actually ends up just driving, it actually just ends up stimulating demand and driving prices even higher, which ultimately make housing even more unaffordable. So I think that's certainly, a lot of the policies that, Canadians have enacted over the last 15 to 20 years is they've been very pro real estate, pro housing, and that's why Canadians certainly have a love affair with home ownership, and that's, I think, why we have one of the highest house prices in the world.
We'll have more with Steve Saretsky right after this.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Steve Saretsky. Steve, is the Canadian real estate market a trend in motion regardless of who wins the election?
I don't know. I think the trend right now is kind of uncertain, to be honest. I think that we had a large acceleration in 15, 16, and into 17, and after that we had a steep deceleration. We had national home prices dipping into negative territory, I think for about 5 or 6 months there. And since then, we've now, the National Home Price Index has been positive on a year-over-year basis. And it looks to be, in my opinion, it's kind of in this sort of sideways moving channel right now. So to me, there's not really like a trend. I mean, of course, there are certainly headwinds, against the housing market. I think, those headwinds are pretty obvious to most people. Obviously, we know record household indebtedness, at the end of an economic cycle. That's kind of where we're at today. So I think there's certainly risk to the downside, but as of right now, it seems like we're kind of stuck in a sort of sideways channel right now.
Do you look at a mortgage as a debt or an investment?
I mean, I think at the end of the day, it's unless it's producing income for you, it is a debt. So I think that's an important distinction is, there's nothing wrong with the home ownership, obviously, but it's important to understand if you look at a balance sheet, I mean, that's going to show up as a debt, not an asset. I know most people say, well, my, primary residence is an asset, but at the end of the day, it's, that you have to pay to service that, each and every month, right? If you don't pay your mortgage, the bank comes and takes it away. So ultimately, if you're looking at it strictly from a balance sheet perspective, it is a debt. Now, if you're looking at it from, say, an investment, let's say you buy an investment condo and it's producing, you have a mortgage on it, but, your rental income is generating you $300 or $400, monthly cash flow while servicing that debt. Well, that's an asset in my opinion. So I don't know, there's multiple ways of looking at it. I'm sure that's a very controversial topic in terms of how people will perceive that. And I know most Canadians generally perceive their primary residence as an asset, but if you're servicing a mortgage, generally speaking, it should be looked at as a debt.
Now people are back from summer holidays. Are real estate listings increasing?
Yeah, for sure, definitely. We've seen a pretty large uptick actually in September. I think that some people were certainly holding off listings in, July and August. And right now, the number of listings, at least in Vancouver, picked up substantially. And that's pretty seasonal, so September, October will pick up, and then we'll see most likely a decline or a drop-off in new listings in November, December, January.
We'll have more with Steve Saretsky right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Steve Saretsky. Steve, are home sales increasing due to sellers lowering and or being more realistic with their listing price?
Yeah, I think the sellers have gotten more realistic for sure. So we have seen an uptick in sales volumes, obviously. I mean, at the end of the day, it's kind of hard to, you always have to contextualize the sales volumes. We had sort of 20-year lows to start the first half of the year, so naturally sales are going to pick up from that base. We've seen that, and I think a lot of that has to do with the lower mortgage rates and, lower prices, sellers being more realistic. And so that's kind of what we're seeing right now. I mean, again, in my opinion, I'm sure some will certainly choose to, disagree with me, but I think that, in my opinion, over the last 2 or 3 or even 4 months, I would say 2 or 3 months, the prices appear to have stabilized. Again, that could, I wouldn't say that's certainly a trend and we're on the road to recovery, but I think that, prices have come off quite significantly over the last 12 to 18 months, and it seems to me like, at least for now, with the, lower interest rates and overall, the economy is still stable with full employment, it seems to me it has put a floor under house prices, at least for now.
Mm-hmm. Now, does that mean now the prices have come down, people are out taking a look again?
Yeah, I think so. I mean, again, people have jobs, mortgages, credit's cheap. Banks are still pretty happy to lend. They're not like overly restrictive with the lending. And so people are out there and saying, okay, well, this condo's down 15%. I got a few things I can sort of walk through, pick through, make a couple lower offers and see what I can scoop up. And I think people are doing that, especially like, you go to the, single family housing market, entry-level house, let's say those are down 20%. At the end of the day, some of these people, like at least I can say for my clients, is, they've been renting for 3 or 4 years, sort of waiting out the market, and, those houses are down 20. Mortgage rates have come off, getting close to, we're getting close. I mean, we're not at all-time lows, we're getting close again. And, I think that's enticed people back into the market.
Are, developers offering incentives to improve sales?
Yeah, so I would say that that's, in my opinion, is still a market that is quite weak. I would say very weak is the pre-sale construction market. Just, people have choices, and at the end of the day, they're looking at it and saying, well, this pre-sale's not going to be completed for 2 or 3 years. Plus, in my opinion, you're still paying a substantial premium to buy brand new pre-sale as opposed to something that's, 1 or 2 years old. So I think that people have been pretty leery. I mean, at the end of the day, the pre-sale market is reality is highly speculative. So I would say over 50% of the pre-sale purchasers are actually quote unquote investors. And obviously I think investors are looking at it and saying, like, what's the exit strategy here? Are you going to be able to sell it for a higher price? I mean, we know that the market's been quite volatile and prices have been coming down. So I think it's scared off some investors in that, aspect. And then same thing, if they maybe don't want to close on it and don't want to rent it out, well, the hope would be that you're going to flip it. And I think that the assignment flipping market has become very illiquid.
Steve, thank you so much for chatting with us.
Yeah, my pleasure. Thanks for having me on.
My guest has been Steve Saretsky. He's a Vancouver-based realtor that you can find online at stevesaretsky.com. If you have any questions for Steve or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. You can find us on Twitter at HowStreet. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.